October was a turbulent month for financial markets. What implications does this have on our investment strategy? And what impact does this have on Mandate Solutions? Joining us now to discuss these topics are Michael Strobaek, Global Chief Investment Officer, and José Antonio Blanco, Head of Multi-Asset Mandates. Michael, October is always a very volatile month for financial markets, but this time round we had global growth concerns, we had Russia, Ukraine, Ebola. Was this just a dip in markets, or are we seeing a change in direction?
We don't believe we're seeing a change in direction. We saw a usual October, if you wish, triggered mainly by weak economic data out of Europe, Germany in particular, and that scared investors to believe that Europe potentially could drive the global economy back towards a recession. We don't believe that this is going to be the case. We see the global recovery still on track, driven by the US. But it's very clear that investors are quite nervous about the growth outlook for Europe. We believe value has been restored, in particular in Europe, but also elsewhere in equities, and we stick to our medium-term view that equities are the better asset class to remain in. We see earnings coming through right now which are decently strong, and that supports equities, and as a consequence of the worries, bond yields have dropped, and that is overall supportive for equities, and therefore our overweight in equities remain in place.
But Michael, if we look at fixed income, yields have remained low for a long time, and we've now seen treasuries dip below 2, we've seen bonds at 80. I mean, how do investors position themselves for this?
Well, investors should position themselves with a strategy of understanding that yields will stay volatile now for quite a while, but they are likely yields overall to stay lower than what most had anticipated. We have recently closed our, if you will, cautious view on the direction of interest rates and are now neutral overall in what we say duration. We still prefer equities to bonds, but nevertheless the risk that yields stay volatile and could even also go down is there. That's not our main scenario. We believe they will drift slowly upwards, but not sufficiently in a way where we say that yields are in any way, or the bonds in general are attractive.
Jose, these views on markets, asset classes, investment strategies, they form the basis for Mandate Solutions. But tell us a bit how you go about translating these views into Mandate Solutions.
As you say, the views are the base, and what we need to do is to transform this base in actionable investments. Mm-hmm. And this basically has two steps. The step number one is actually to transform the views in weights, in which asset classes we want to invest, in which markets, how much we want. That's the tactical asset allocation. Mm-hmm. And then the next thing is also to fill this weight. So basically to say, okay, how do we want to invest in a particular market? Let's say US equities. Do we want to buy stocks? Do we want to buy other instruments? And the other thing is, at the end of the day, a plan is a good thing, but you need to execute on the plan. So portfolio implementation, the way you actually do it is actually very, very, very important, because if you do effectively, you can actually avoid leakage in terms of performance. The one important thing here is to make sure that this comes out of one hand. Mm-hmm. And the reason for this is that actually by making sure that this comes smoothly, you will reap the maximum of benefits of the ideas. Mm-hmm. Otherwise, you end up having some drift in terms of performance.
Okay. And Jose, what about investors who like to take these decisions or some of these decisions into their own hands? Are they still able to benefit from your expertise?
Sure, of course. We basically can offer the portfolio to these clients too. Mm. Of course, it's kind of more a suggestion, let's call it a model portfolio, in the sense that the client is still able to then decide what she or he wants to implement. And this is something which needs to happen, or we strongly recommend to happen together with the client advisor, because you need to consider what the implications are of not following certain or emphasizing other decisions. So it's perfectly feasible. It can be actually kind of discussed in depth with your client advisor, and of course the client advisor is always available to discuss with you this proposal and how to adapt it to your specific needs and expectations.
And so, Michael, how do we set ourselves apart from the competition? How do we go about offering the best solutions to our clients? What priorities do we set for the private mandates business?
Well, for existing clients, it's our priorities obviously is to create an outcome in terms of investment performance that is acceptable to the client and corresponds to his or her expectations. Combined with that, we try to be very forthright and direct about how we came about creating this result with clear communication and allowing and giving relationship managers tools in hands to communicate with clients. In terms of new clients coming in, we are outlining our offering such that we believe that clients can be guided very clearly into the solution that is right for them. They need to have a deep debate with their client advisor about what exactly that solution should look like. And we offer flexibility for the client to exclude certain things in their mandates. They can choose their base currency, they can choose to exclude certain asset classes if they're uncomfortable with it, or they can even set quite specific restrictions. And with that overall package, we believe that we set ourselves quite well apart from our competitors.
Thank you very much.
Thank you.
Thank you.
For more information on market movements and global trends, check out News and Expertise on Credit Suisse website.